All right, everyone. We're officially live here with Jay. Welcome, Jay. Thank you for
Thank
coming
you.
on.
I know it took us a little while to coordinate, but I'm happy to be here.
Yeah, it's totally fine. So we've got we got 3 people already commenting. Sam Talks Finance here says I've been waiting for this all day. Wow, perfect timing with buys and sells this week. So most of my audience is heavily invested in YieldMax. So a lot of
Thank you.
YieldMax fans on here. Yep.
Excellent.
We've got Tim the Baptist here says, "Hey, ready?" Denny Keaton. Ready like Freddie. Yeah, a lot of people crack jokes in the audience, so we have a fun time on here.
Great.
Yeah.
Yeah, looking forward to it.
Mm-hmm. But I guess we'll go ahead and start with what we were saying before I went live. So the reason for like NVDY not going up as much or not a lot is because of the option chain, right?
Yeah, it's the whole covered call thing, right? Where we give up the upside, and that's how we earn the premium that we sell every week. And so I think I'm thinking back now. I know it was only like a week and a half ago, but maybe was it even that long ago? It was a week ago. We had like calls at like the 325 and the 312 halves, and essentially that means that no matter how far up the stock goes, our gains get capped there. But that's what we expect. That's why we get paid for in the first place. And so I think on that day, right, NVIDIA was up like 25, 30%. We were up maybe 8, right? Somewhere in that range, 7 or 8. And so in those scenarios, we got paid our premium and we appreciated all the way up to the strike price. Now, I will add one of the reasons we continued to kind of capture gains throughout that day or even into the next day, because as soon as the stock opened up at 380, we were already capped out, right?
Mm-hmm.
I forgot where it closed, right? Was it even above 300? And then boom, 380. We actually traded it intraday. So about 10 minutes into the day, once the options market settled down a little bit, we ended up, rolling up our synthetic to capture gains, but then also moved our short strike higher too. So it's a little complicated. And I'm happy to go into more detail about that. But the gist of it is we were able to capture even more as the next day opened because we rolled and took action early. And that's one of the great things about an actively managed ETF.
Right. We're going to have huge participation today, I can tell. I've already got like 14 people on, just started. So we're getting tons of questions. I'll try to moderate as best as possible. One thing I did notice, though, in the after hours, because I follow the after hours trading, it was actually up 30%. It was up to like $26 before the market opened.
Yeah. Not good trades, right? Unfortunately, right, not everybody gets the covered call piece. And so, we knew we were going to cap out at like the 23 range, and I saw trades going off at 26. Like it was just because the market maker would take those trades because it wasn't going to be worth that. So unfortunately, if there were trades going off in the after hours that were going off, I did see a 26. I think I saw a bid over 26, and I was like, oh my gosh, like somebody doesn't understand how the ETF works, that we're capped out, right? Like you can't make that much in a single day because of the covered call aspect that limits your upside gain. And so unfortunately, I mean, there was a decent amount of volume after hours that, night after the announcement. And those were trades where folks that kind of didn't get it, probably they got a bad deal. Hopefully we eventually get the price back up to 26, but those were not, those were really poorly informed trades, unfortunately.
Yeah. Now I run a podcast on here, so my co-host is actually able to join. I didn't think he was, but I'm going to add him on. His name's Andre.
Okay.
Yeah.
Great.
So I'm adding him. So we'll have 3 of us.
Hey, Andre, how are you?
Welcome.
I'm good. How you doing?
Good.
Great.
This is Jay from YieldMax.
Awesome, man.
Yeah.
So
we have some questions backlogged here. You have a lot of fans on here for sure.
Well, thank you. Appreciate it. We're very excited about these funds.
Yeah. So far, let's see. Hoffman and Filter says, what factors can impact the potential income of a YieldMax ETF?
All right, how many hours do we have today?
Well, you said you might do 1 hour.
So look, this is always the most interesting question that we get. And I'll try to boil it down. There's 4 main components that go into what drives the yield on the ETF. I think the first thing is to understand the yield is driven by the gains we make in the covered call selling, right? We sell a call every week or every 2 weeks or every month, whatever the time frame is going to be. And the gains that we make from that call selling is what we'll distribute monthly, right? So that's the driver of the yields, right? It straight up comes from the gains that we earn from trading. Sometimes we earn a little bit of the upside of the stock. Sometimes it's from the covered calls. Sometimes we lose on the covered calls, but we make it on the stock. But let's just say it's trading gains for the month that kick out to the yield. Okay, so really, what are the things that drive the gains in the yield, right? Those four things are going to be the price of the underlying ticker, right? So, you got ARK at 40, you got, NVIDIA at 400, right? That is going to change the amount of revenue we bring in just by the size of the underlying. The second is going to be how far out of the money we sell the calls. The closer to the money, the more you're going to earn on a percentage basis. The farther away, the less you're going to earn, because the chance of you going in the money is less when you're farther away. So the return or the premium you could sell for is less. And if you're closer to the money, you'll get more premium, okay, because there's a higher chance that you'll go in the money. The third component is going to be the amount of time until expiration. The farther you go out in time, the more you should earn. It's not linear. It's kind of parabolic, right? A little bit, not in a good way, right? The farther out you go, it's an incremental increase, but not linearly. So if you go out a week, that's great. Maybe you're going to get 1%. But if you go out 2 weeks, you don't get 2%. Maybe you get 1.5%. Right? You go 3 weeks, maybe you get to 1.75%. So that's one of those things that the more time you add, it's not linear, which is why selling weeklies is a lot more profitable than, say, selling monthlies, right? When you compare us to,
I've heard
say,
that.
like a QYLD or a JEPI, when you look at those that do monthly options, we're going to create more premium generation by doing weeklies, right?
Mm-hmm.
So time is the third. The fourth, and by far the most important factor, is the implied volatility of the options.
Yep.
And that's a weird one, right? Like, most folks don't understand this concept, implied volatility, but think about it as the expected move as it's priced into the option. So the higher the implied volatility, the more premium you're going to get in the calls. And this has been the number one reason why the yield has declined since the launch of TSLY and OARK, but it has also been on the upswing, and you could see it in the price, right? You could start to see it in the monthly price. And so the month of May has seen an upswing in implied volatility. But when you look at, say, tracking from January to February to March to April, right, vol's been on this steady down move. That has been the number one reason why we've seen a decrease in the option premium we could sell for. The concept of implied volatility, a lot of people think like VIX, right, when they hear implied volatility.
Mm-hmm.
Yeah, the VIX is a representation of the implied vol of the S&P 500, but implied vol can go up when the market goes up, and it can go up when the market goes down. It could go either way. Generally, when you see fear, vol goes up through the roof. People are scared, they buy puts, it jacks up all the option prices. But look at NVIDIA. Look what happened this last week. It was trading at like a 30% implied volatility before earnings. Now, after it's shot straight up, it's trading more like a 50-60 implied volatility. So
Yep.
it's not always downward movement can cause a spike in IV. So sorry I rambled on there a little bit. So the four factors: price of the underlying, time to expiration, distance out of the money, and applied volatility. Those are the four factors that really drive the yield and the
Okay.
call. So
I know a lot of people in this audience were concerned about the TSLY dividend last month because I think it fell in half. I got bit by that myself because I bought in a lot, actually. And it was like half of what it was the month before, but that's because of what you just explained, basically.
yeah, the price dropped, right?
Yeah.
Yeah, this is a good one, right? So the yield was like 90 cents, 95 cents, and then it was 44 cents, right, last month. So two things. One, the underlying price of Tesla dropped about 20%, and then the yield came off by about 30%. Roughly speaking, 20 plus 30 is 50%. That's why it was cut
There
in
you
half.
go. Yeah.
So yeah, and so now, right, we've seen Tesla go up, and we've seen vol go up. without telling you what the yield is going to be, I don't know off the top of my head, the month's not over yet. You should, based on those factors, see an increase in the yield of
That's what we're
TSLY,
thinking.
just
Yeah.
based off those things.
What if Tesla got back up to like $400 a share?
Yeah, it all depends how it got there.
Mm-hmm.
If it did it in one day, like NVIDIA, right? I mean, I guess that would be a double in one day. But if it did it really quickly, we'll end up getting kind of, have that capped out every once in a while on those weeks, right? We try to give it enough room to get some upside capture, which, by the way, is a real interesting thing about the YieldMax is that a lot of other buy rights don't do. We give upside growth, right? And it paid off this month, clearly.
Mm-hmm.
But so let's say it gets there quick. We'll capture some of that gain, and then the vol will be higher because it made that quick run higher. So the implied vol will be up there, and then the price of Tesla is just higher. So we'll sell for more dollars in the fund. So that'll also be helpful. Those will all be great. But what you really want in a covered call strategy is for it to take its time to move up. Like, hey, let's go up 10% a week. That's perfect. Like that kind of move is great for a covered call strategy because we're getting a lot of the upside. We're capturing an increased amount of premium every time that it does it, that we sell those options each week. So if it could take a year to get there, that would be great, right?
Mm-hmm.
You would be very happy with the way the growth of TSLY would go along with the higher yield.
Now, when it goes up 10% a week for covered calls, are you having to, is that within like the range before it hits the strike price?
That's a little outside. That's a little
Okay.
outside, but we know things don't go, straight up every day. So
Right.
yeah, usually we're selling calls that are like, if you looked at our strikes, if you look at the positions, right, we're usually somewhere between 5 to 10% out of the money. Recently, because vol was lower, we were bringing it in to 5% out of the money. If we start to see more volatility, we're going to want to give it more room to breathe and more room to the upside.
Mhm.
So we'll expand it. Our prospectus gives us the right to go up to 15%. So we could go higher than that if we wanted to. I think once we probably sold one. It was right after that strong rebound after Tesla bounced off 110. I think we sold one that was like 18% out of the money and captured almost all that on the way up. So that worked out. But, usually we're in the 5 to 15% range.
Okay.
So we can get tapped out. But look, usually that's okay because we'll take profits on the underlying as it moves as well.
Yeah. Okay, so we have a backlog of questions here.
Great.
He's asking, he says, so impressed with the new products, wonder about the team logic and strategy to manage such different ETFs. So similar lines.
Yeah. So look, we initially, you mean similar like additional YieldMax products? You think is that what you're asking for? I think there are more coming. We filed for 15 out of the gate. We obviously have 4 live now. I think you should expect probably June and July to see probably another 4 coming out, right?
Okay.
Other editions of the original filings. And then, we believe that there's such an open market for this that we probably end up going out with a lot more after this.
Mm-hmm. What do you think the next one's going to be? Amazon?
I don't know if I'm allowed to say, but
Okay.
that's a really good guess.
Yeah, okay.
Without saying.
Yeah.
I don't think there's any problem with me disclosing it because they've all been filed. Yeah, I don't have a launch date, but I think Amazon is next.
Okay.
Probably Meta, Square, and Google will come after that.
Okay. And then he's asking, how are YieldMax dividends taxed?
Yeah, so I think because they are we're distributing the gains, the short-term capital gains. I think you should expect these to be treated just like non-qualified dividends. There is always the risk. It's not a risk anymore, but there's always the chance that there's some capital that was distributed and that won't get taxed. But I think you should just assume that these are going to be taxed as non-qualified short-term capital gains rate, kind of the worst scenario. So better than an IRA, right?
Yeah.
Yep.
And the next question, do you drip at the net asset value?
Yeah. So when we think about total return, we always think of it like as if you reinvested the dividends. So that's usually a broker function, right? Talk to your broker about doing the drip. For the Zega Financial clients that are invested in the YieldMax ETFs, we reinvest the dividends immediately, right? So after the pay date, we're always reinvesting right back into the ETF. It's kind of, I'm not, forgive me for not knowing this if you've done the math on the show, but the compounding rate when you're kicking out even just 3-4%, I say even 3% yield a month, which is kind of nuts,
Wow.
is crazy how fast you compound your share count, right? So, I mean, you're doubling every 18, 19 months on your share count. Like, to me, that's the way you treat a yield-based product as a growth product.
Yeah.
Okay.
Yeah.
All right, let's see here. He says, love the differentiation. Best regards. And then Rob Smith says he has a bunch of TSLY, says, thanks for paying my mortgage.
You're welcome. You're
Yeah.
welcome.
Wow.
Yeah.
We appreciate the support.
Yeah.
Yeah, I mean, if you're
And
going to
then-
use it for cash generation, like, I mean, it is definitely a unique product in the marketplace, these, right, for doing it. The only thing about all this, and this is no surprise, and we saw it with Tesla, is you take on the risk of the underlying when you own the YieldMax funds, right? Like, you have to be comfortable with Tesla risk to own TSLY, right? You have to be comfortable with Apple risk to own APLY.
Right.
But
right.
you probably already are. Then why not have a chunk that's kicking out dividends like this?
Right. Now, this is more of a general question, but he's saying, how sustainable are these funds long term?
Yeah. Look, I think so. The biggest risk, there's two big risks. Obviously, the first one I just mentioned is the underlying. Like, if let's say Coinbase, by the way, is one of the ones we originally filed for. If Coinbase ends up being shut down because they have a Wells notice from the SEC, right? That's going to be a problem for these funds because they're going to track the price of the underlying, right? So the sustainability, first off, is reliant on the sustainability of the underlying ticker. Okay, I know it's a no-brainer, but I just thought I'd say that one first. The second thing is, how about these yields, right? Is this going to be like one of those leverage triples that depreciates and constantly has to do an inverse, like a reverse split? I don't think so, and here's why. We're able to capture some of the upside in the YieldMax products, right? And then we're distributing out the gains, but we're still able to capture some of the movement of the stock. Now, annually, we have to distribute everything that we make. But if you're reinvesting those dividends, you'll keep your value up, right? So let's say we distribute 50%. I'm gonna go low. Say we distribute 20%, right? And you've reinvested and you've grown your share count by 20%. If the underlying is stable and the YieldMax ETF only decreases by the amount of the dividend, you'll offset it with your share count, right? So even though the underlying, like when Tesla dropped, when it was in the 150s, right? I think we were down to like 12, $13 a share, like right after the last dividend. Now it's built back up over 15. But the idea here is that, oh my gosh, are they going to distribute themselves into oblivion? And the answer is no. And the best way to fight that is do the drip right back into it because you're keeping your balance up. And so you're keeping your share count up. But, look, it's one of those risks of a covered call strategy because it has all the downside and not all the upside. We're limiting the upside capture, like how we started talking about NVDA. So it's just one of those things to be aware of. But I do think that they are sustainable. We wouldn't be making such a large investment in them and launching so many of them if we thought that they were going to kind of fizzle away.
Okay, next one here. How do you see the yield changing as 40% on TSLY can't be sustainable? If so, a $10,000 investment will make me millions by the time I retire. What's the expected growth rate year over year?
Well, you tell me how much Tesla is going to grow, and I'll tell you how Tesla will do, right? You tell me the implied volatility of Tesla, I'll tell you how we're going to do. But really, it all depends on the vol of Tesla, right? So if the vol, which I don't see it going away anytime soon, it's unfortunate that I think April was like the lowest implied volatility on Tesla in years, right? Wow. And so that was bad timing to launch a fund. Actually, we had even worse timing. We launched when Tesla was 180 and went down to 101 intraday and then back right up. That's like the worst scenario for any covered call strategy. So naturally, that happens when you first launch a unique fund like this, right? But the idea here is we should always be able to harvest the volatility of those short-term options. And so I do think that if the volatility stays high, we'll be able to sustain that higher yield. And, watch the IV, right? Like if you open an option chain and you watch the implied volatility of these underlyings, just generally, it doesn't have to be the exact option we're selling, just generally understanding that. You can even put that in a chart. That's going to tell you what you should expect from a yield perspective. And so, yeah, if Tesla stays volatile and stays, solvent, seems like Elon's going to make it these days. And I do think that there is a good amount of sustainability of a yield like that. Now, again, right, it's a yield on the underlying price, right, of the ETF itself, right? And every time we distribute, the price drops, which is why we recommend reinvesting to keep your value the same. Of course, if you're paying your mortgage, you can't keep the value the same because you're taking cash out. But the idea here is you'll be able to exponentially, really compound the number of shares you have. So even if the share price does drop by the dividend amount, you're earning more because you just happen to have more shares. So I think there's a lot of viability for long term on this. Again, it's the volatility of Tesla, right? You have to be comfortable with the volatility of Tesla and the ups and downs. So it's, it's kind of live by the sword, die by the sword. We harvest volatility, but volatility can be scary.
Hey, actually, I got a question for you.
Yeah, go ahead.
Yeah.
Are you able to see how many people are like the amount of volume of reinvestments of their dividends back into your guys' ETF?
I don't. I'm sure there's a report that our administrator over at Title could tell me about, but I don't see it. I do see a decent amount of volume on the pay date, right? Which is good. Like that's what we would hope to happen, that those dividends are getting reinvested. Those are some of the higher volume days, but I don't know the percentage of those that is because of just normal Tesla movement, or it has to do with drip.
Okay.
Yeah, I mean, but that's, look, if you're not reinvesting, if you're a yield investor and you're not reinvesting those dividends, you're not really doing it right. You want to do that.
Right. Okay, so next one. What happens to the cash secured out if it expires in the money, and how do you settle it?
Okay, yeah, so we will trade it, right? So the option, we never really want to get assigned on any of these options. It's why we use flex options as kind of our synthetic, which we could get into that complication if you want to. But so what happens if the options expire in the money, right? Well, first we're going to trade them, right? We don't want them to get, we don't end up, we don't want to get the shares called away from us that we don't have and end up being, short the stock. So we'll usually trade. And so the rules that we use for, when is it time to trade have to do with the amount of time value left in the option. So this is even more important than actually the settlement of the options, because we're just going to trade out of the options, and there's no, we should never really own any shares or be short the shares. But the most interesting part about this is, like with the NVIDIA options, right? The time value on those 312 halves that we had the morning after the announcement, was down to, 10 cents. When the time value gets that low, it's time to get out, right? That's when you may get early assigned. And even though it was an expiration, we could have been assigned on that scenario, right? The person that was long that call could have wanted the stock, and I would have had to have delivered it to them. So when you see the time value decay, usually, I like to use a rule of thumb that you've earned, 90+% of your time decay, right? So if we sold that option for $4, if it was 40 cents or less, it's probably time to get out of that option, because at that point, it doesn't make sense anymore for the person who's long the call to stay long. They should exercise, right? And you don't want to be on the other side of that. So we watch for the time decay. By the way, this also works when they're expiring to nothing. Like, let's say, I'm trying to look at the positions that we have. I think in NVIDIA, we've got a 425 call, right? We sold that just the other day. The 425s are almost worth nothing. We may close that early tomorrow if it's down at like a nickel. There's no reason to hold that anymore. Might as well free that up and sell calls again.
Yeah, but wouldn't the 425 have come up in value, because NVIDIA just went over 400 last Friday?
Yeah, but we sold that one after that, right?
So the premium is gone.
The premium's gone.
Yeah,
right?
I see.
You're totally right. Yeah. So it's evaporated out.
Yeah.
And that's the whole point. Earn time decay. Earn time decay. Whether it goes up or down, I don't care. I know I'm going to earn that time decay. And so, yeah, so in that scenario, we'd probably, roll that out tomorrow. If that's, if that's down to a dime, we'll probably get out of it quickly, right? So it's just one of those things that we watch the time decay as our rules to get out, so we don't get early exercised or we're not sitting on dead shares.
Mm-hmm. I actually had a personal play in NVIDIA. The opposite of that, I had call options. I sold them in
You were
February.
long.
Yeah, after those earnings, I sold. I had an 85% gain, but I'm regretting not holding them longer.
So there was somebody that sold you that call that had to pay up that difference.
Right. Yeah.
And you paid something for those calls, right?
Yeah.
Yeah. So they earned their time decay, but they missed out on the delta appreciation.
I made money on it, but if I had held it, I actually covered it on here. It would have been like a $23,000 gain or something.
Oh, that's nice.
On 3 contracts. Yeah.
That'll pay a mortgage.
Yeah.
When it comes to NVIDIA, you think that gap is going to fill?
So as the fund manager for YieldMax, I don't care. But as a general investor, look, gaps get filled, right? Like that's the normal spiel. On single stocks, sometimes it could take a while, but usually gaps get filled, especially like in the S&P. Like I am a stout supporter of all gaps get filled on the S&P.
Yes.
You get a single stock, it's like, it may take a while.
Mm-hmm.
Yeah. So I'm not telling you, short NVIDIA right here, but what I'm saying is actually in that scenario, right, our strategy should outperform because we're earning premium on the way down.
Nice.
You still got to be bullish NVIDIA if you want to be an NVIDIA, right? Like any covered call strategy, you have to kind of at least lean bullish for any of these because your risk is always to the downside.
When can we expect that next dividend for APLY and NVIDIA? Do you know?
Yeah, so the announcement will be on June 6th, the next dividend announcement. There's a schedule actually on our if you go to any one of the pages on the YieldMax, ticker.
I can go there. Okay.
Yeah, if you could see, I can even show you. Yeah, if you want to go there, I'll show you right where the whole schedule is.
Okay. Meanwhile, I put up another question up here.
Okay.
Or maybe it was a comment. Let's see. On every position I have with my brokerage, I can see how the position is doing daily, weekly, monthly, and determine my profit and loss. Couldn't YieldMax provide that on their site with the potential? And there's a part 2, potential dividend based on the synthetic covered call options. It would help income investors like myself have a better understanding of my position and my expectations.
Yeah, that's so listen, that's obviously a really rational question and one we would love to be able to provide. And so by doing things like this and to help set the expectations about how performance will look and the criteria like implied volatility and the expirations and the out of the money stuff is designed to kind of, we do these to help explain that, but we can't put kind of future gain projections, right? It's one of those things. Oh, yeah. Okay. So I'll go right back to that. But if you wouldn't mind, just click on, say, TSLY, for example. Just click on the ticker there.
Okay.
Yep. And then once that opens a new page, scroll down just a little bit. Right there. Stop right there. So right below where there's that 4.14%, there's a line that says for YieldMax ETF distribution schedule. Click here. You see what's, yep. Okay. Click that. You can always find, and every one of the pages should have this. That link, if that opens up.
Oh, nice.
That will give you, if you want to share that, we can't see it yet on the screen, but if you share that.
I'm going to have to switch. Here we go.
Yep.
There
you go. Yeah,
wow.
So now this gives you all the declaration dates, the announcement, the record dates, the pay dates. So this is, I don't know why we make it so hard to find that. Like, this is what everybody wants to know. Like, when are you going to tell me the next dividend? So, so there you go. There's kind of the schedule. And so the question around NVIDIA and Apple or NVIDIA and APLY are, when are we going to announce their dividends? They would be in that announcement on the 6th.
Yeah, that makes sense because that would be all of them.
Yep, we're going to put them all out in one press release.
So, and then July 6th is the next one, August 3rd, September 7th. Yeah, so the audience can see there.
Exactly.
All right.
Yeah, so all right, so back to just finishing up that other question. Like it's the SEC's really kind of frowns upon us giving expected returns, right? Historical returns are good to give, but they're a little misleading, right? Like the first month of the YieldMax ETFs were, it was great yield. Well, it was January because it was like a month plus that we had in that first one, and they look great because volatility was great. And then as we've seen, it's kind of come down because volatility has come down. So I think, the best way to kind of project what the yield is going to be is to watch the volatility of the options in the options market. That's kind of going to give you the best, and that's always kind of quoted in a percentage basis. And so you should expect whatever the IV is, generally you should assume like an 80% of that is what the annual yield will be. But it changes so frequently, right? We just said NVIDIA went from a 35 vol to a 65 vol in a matter of a week. But if it stayed here, we should kick out, 80% of 65, or it should be that. Like that's the quick math to use on that. It's not, in stone, but it's a general guideline when selling calls like we are on a weekly basis.
Mm-hmm.
You could also just look at the option chain and, see what we're selling the calls for and do the math. Oh, if they do that 52 more times, right?
Yeah.
There's the number, right? Like if we sold, the $2 on every Tesla option, and we did that 52 times, you do the math, hey, it's 1% a week, compound that out, just about 60%. Like that, you could do that math too.
Mm-hmm.
If you feel comfortable looking at an option.
Yeah.
My buddy.
Your buddy, number one fan, right? So you have books too.
We do have a book. I wrote it in 2011, so it's fairly dated. But the title is Buy and Hedge, and it's about investing long-term with options and using options to hedge. But there's a little bit about covered calls in that book, but the book is mostly about, using options as a way to invest long-term and hedge. So whether you're using long calls as stock replacement or doing things like collars where you're paying for puts with covered calls, that's all kind of in there. It's meant to be a how-to for the do-it-yourselfer. Like what we didn't get into here is my background before I started Zega Financial was I ran the trading business at TD Ameritrade for a decade. So I was all about, so I was all about empowering the retail individual, to invest and trade for themselves. Oh, hey, there it is. Thank you for pulling
hold
that
it up here.
How many stars do I have? Only 4. That's all right.
Seems like this strategy was ahead of its time because I don't remember hearing a lot about options back then.
Yeah, it was a little early. Like that was really kind of the reason why, when we launched the firm and wrote the book, it was like, we just need people to understand that options aren't only a speculative vehicle. They can be used for income like YieldMax or protection like hedging. So yeah, and then that was how my firm was founded, right? And so we're all options, right? We probably run, 12 to 15 different individual strategies for people. And then we manage a handful of funds. We manage the YieldMax funds and some other items too. But the idea here is we just think, if you could think of it, I could probably think of a better way with options to do it.
Nice. Yeah, I think a lot of people, their brain just kind of shuts off when it comes to options. It's very complicated to learn, but once you get it, it clicks.
And they're fun because you have so many different things you could do with it, right? All of those different components allow you to customize whatever it is you think the outcome should be.
Right. I miss the 2020 and 21 market where it was easy to just get the long call options and just make easy money. Every earning was like a beat, and it was so easy back then.
It was hard to invest in 2020 though, right? It was like, there's people dying all the time here. Like, what's happening?
I know, it was weird. It's like that's happening, but people are like making money. It's a real time,
Yeah, and actually, it's a really good lesson for a lot of people to realize that the market is not the economy. Those are two different things. The market typically leads the economy, which is like, look, we're pressing higher. Everybody forecasted a recession this year, and I don't want to make broadcast commentary, but just the idea that the market is still going up, regardless of, Fed is probably going to raise rates again. You got all the recession talk. Market goes up because it's usually ahead. Right, the market's 6 months ahead of things like earnings and the economy. So it's just one of those things to watch. By the way, I'm not saying the market's going to go up more, but my point is, it's been interesting, right? That bounce off October has been, fairly strong and sustainable.
Yeah. For sure. Yeah.
Oh, and Jay, I was wondering, do you in your book do you cover any economics at all? Like any purview on it?
Not really. It's more of a how to use options to manage volatility, right? It's more about that versus like a fundamental analysis. We don't do any technical analysis either, like the gap idea, but it is more about options as a tool versus teaching people how to read and look at the economy.
Mm-hmm.
Okay. Wow.
There's much smarter guys than me out there for that stuff.
Oh yeah, because I like when it comes to that gap, especially with NVIDIA. Like I see a bunch of people looking at exiting just because that gap is looking at filling.
Yeah, my one of my I at our firm, I have another guy that works with me that we do a podcast, and he writes our blogs. He told me today, perfect evening star formation on NVIDIA last night. It's like I could have told you it was going down today. So that's a candlestick, formation. By the way, we don't use any of that when we look at the YieldMax stuff, right? We're very methodical. Back to the subject, we're very, we people expect us to sell calls on the underlying, and that's what we're going to do. Now, does it make its way when we're picking a strike price? Maybe, right? So as we're looking at, say, Apple, for example, when we had the choice between selling at 180 or selling at 177.5, we sold the 180 because we said, that's probably where Apple tops out. But look, sometimes you can't make that kind of a decision. It's only on the margins, and that's what active management will do when it comes to options. You got to choose a strike, right? So How do we choose? And so I will admit, from time to time, we could be slightly influenced by a technical or a previous high level when choosing those kinds of strikes. But generally speaking, it's not a factor in trading the YieldMax products.
This should be an easy one. Implied volatility on a given ticker. I know I can see that on Yahoo, typically.
Yep. Usually it's a field or a study, like in any charting application. I'm, being a former TD Ameritrade guy, I'm a big fan of the Thinkorswim platform and their institutional pipes platform. It's one of the studies. You could just chart, IV right over the top of the underlying.
I'm a big fan of the backtest feature for options.
Think back, yeah, it's great.
Yeah. So you worked on Ameritrade before?
I was at Ameritrade from 1998. I just dated myself to 2010 when I left.
Okay.
Actually, I was the one that bought Thinkorswim for TD Ameritrade. That was one of my last deals. So
that's one of the best
great firm.
They're
much better together than separate. It really did propel Ameritrade to be the spot to go if you wanted to trade options or futures or forex. And that's where the world has gone. So really proud of that work that we did there. And the guys over at Thinkorswim are great. Always had a great relationship with them. So yes, so that's, almost all of the assets that we manage. Zega manages about 650 million. Almost all of it is at TD Ameritrade. Soon to be Schwab, but still.
Oh, that's right. Yeah, they merged or something. Yeah.
Yeah, they sold. That was an interesting deal. I digress.
We hit a record audience today. 36.
Oh, awesome.
Nice.
Yeah. So, okay, he liked your explanation on potential income.
Thank you.
And then let's see. Good to see SLY over its 50-day moving average. Are we hoping for a sideways market on Tesla as we are capped on the upside? Missed a lot of. Oh, that's another ETF, TALA, over these last 2 weeks. Yeah.
So let's take a look. So our options are, I could just tell you as of yesterday's close, right? Because that's public. We got 202 halves and 212 halves. So most of the volume's at 202. Yeah, a little sideways. I don't know. Do you guys see like that little pop on Tesla at the end of the day today?
Yeah, it went over 200 again.
Yeah, 204-ish, right? It's trading at 202.5 now. So yeah, sideways for tomorrow would be fine, right? But it's okay. Like if Tesla goes up, it's fine, right? Like that's still a good thing when you have a covered call strategy. But like if we wanted to nail it exactly, we wanted it to expire exactly at 202.5 on Friday, right? Then that's we maximized it. But there you go.
We can see these if we go all the way down here. We can see. Here's the July 23rd 185 call.
Yeah, that's part of the synthetic. Yeah, there you go. There's the 212 half you're on now.
Yeah.
And there's the 202 halves. Yep.
Mm-hmm.
Yeah. So that's our main position. So that option as of the close, still had like $4. So I'm just looking at my other screen when I look over. That had, $4 of premium, $4.50 of premium left in it. So, really, if you could argue that as long as Tesla closes below 207, TSLY would have outperformed Tesla between now and then, right? Because we're going to earn that 4.5 regardless. I like to say that, there's not a lot of guarantees in the stock market. The only thing I can guarantee is that tomorrow comes after today, and I can earn money when that happens, and that's selling options.
I was going to say the one guarantee is that the market will move one direction or the other, right?
Yeah. Like we've had some sideways days, right? Like some of the S&P days have been really interesting. Look, I would say sideways to slightly up is always better in a covered call strategy like YieldMax. Yep.
And I think we addressed this one. We showed the dates on there. So the next announcements are June 6th.
Right.
Okay, and then we had Big Lance showed up here. Price erosion. What's the expectations on these funds?
Yeah, that's a little bit. We talked a little bit about that earlier because we're distributing the dividend and it's such a big piece of the underlying ETF's value, right? You're getting cashed out of some of the gains that all of the gains that we've earned are getting paid out. And the way to offset that erosion is reinvesting those dividends, and you keep your value at the same level. And then next time you'll have, a higher dollar amount that comes in for those shares. So again, it's, the price erosion, the real time that will have price erosion is the fault of every covered call strategy, which is not that the stock goes up, but that the stock goes down, you sell a call, and then you limit your participation on the way back up, right? You limit the rebound. That happened to us in, December, January with Tesla, when that, rebounded so strongly. We didn't participate in all of the gains on the way back up. Hence, we're, on an inception to date, TSLY will lag Tesla. So that is how you get the true erosion against the underlying. But besides that, if you're reinvesting the dividends, your value will, your dollars invested in that ETF will stay the same or go up over time because you're just reinvesting all that time decay that we earned.
Okay. One question I had. So you went on a couple other YouTube channels. Were you on the passive income investing channel?
I think I was on that one. Yes.
Yeah.
I think that was the only other one.
Oh, okay. Oh, wow. That's great. So I'm the second one.
You're number two, man.
Yeah. That's great. Great honor. Okay. So KJK Good says, again, where's the best source of computing UVE?
Again, I think, are they talking about volatility?
I think so. He abbreviates things differently sometimes.
Oh, we're going to have some other people jumping on right now. I got
awesome.
Mike.
Set a record again.
Here you go. I'm sending out the links. Give me 1 second.
So I think we went over that already. How do we rank your products for allocation?
Okay. That's a good one, right? So if you're building a basket of, say, YieldMax ETFs, right, as we have 4, and then we'll have 6 and 10, and who knows how many, I think I always think of risk first, right? How much risk, how much volatility do you want in your portfolio? And then, of course, the close second is how much do I want to make out of this portfolio, right?
Yeah.
And build it from there. I do think it makes sense to have a little diversification. It's one of the things I like about ARK over TSLY, is that it is kind of naturally diversified as an ETF itself. Of course, I like the volatility of Tesla itself. So, kind of double dip in there because it's 10% of the ARK fund holdings. So I like that. I like APLY as kind of a nice ballast, right? Gives you some stability, but you never know when a single ticker can do what NVIDIA just did, right? So
right.
I like having some allocation to all of them, but it's a risk thing first, right? I always think about if there's actually 2 chapters in the book dedicated to risk, and the general idea is the only thing you can actually control is the risk you take. The return and the outcome is what you hope for, but risk is all you can actually manage. So, I think it's how much what kind of volatility you want to add to your portfolio, and generally speaking, these are going to lean to be on the more volatile side because that's how we get all the yield and the juice. So. I would say manage it that way. Think about it that way.
What NVIDIA did, though, I saw that it seemed like that would happen a lot those 2 years, like 2020, 2021. I would see just crazy earnings reports. I remember even companies like, what's the video game company?
GameStop.
Roblox. It would just,
Roblox,
we would
yeah.
have these crazy, there was an option I was out of the money in, and all of a sudden the earnings came out and it just shot into the money. It was nuts. Yeah. Anyway, okay, so
Options can be fun there.
yeah, he likes the strategy.
Thank you.
Yeah. Compared to other covered call funds, we're getting lower returns with higher volatility. As your asset under management increases, will the expense ratio drop? Ooh, tough question.
Okay, that's good. So I'm not sure which ones are. So again, our returns are tied to the underlying ticker first and foremost, right? So if Tesla drops, we're going down. So like let's take like JEPI or QYLD as two very popular covered call strategies. Those are index-based products, right? JEPI's kind of tied to the S&P. QYLD is tied to the NASDAQ. So you're going to have lower volatility in those just because of their build versus, say, an NVIDIA or Tesla. From a yield perspective, though, I'm pretty sure we're out driving them, dramatically, right? So look at the returns on a total basis. I think we do watch how QYLD performs, and if you look at, say, the last, I don't know, 3 months, QYLD has been on a good run because the NASDAQ's been on a great run. Now, so is Tesla and so is ARK, but not really as much, right? ARK over the last 3 months is up like 1.5%, right? OARK is up, actually happens to be up like 4.5%. So that's nice. If you look at, say, Tesla over the same period, up 5 or up about 5. I think as you start to watch like APLY, which is probably more of a apples to apples against QYLD, you'll see similar performance there. Hopefully a little more on our yield because single stock should capture more yield than an index. NVIDIA, too early to tell, but really, in the last month, obviously all of our funds have outperformed QYLD. That's only up 3%. So I think I'll push back a little bit on the why are we getting lower returns? I think when you look at a total return basis, that's the way to evaluate that. If you're not sure how to do total returns, the easiest way, like you mentioned Yahoo Finance a minute ago, just use the adjusted price column to determine your total returns, right? Because that way it incorporates the dividends. It actually incorporates reinvesting the dividends. So I would say take a look at those.
Speaking of Yahoo Finance, I have the #1 Yahoo Finance fan on, and he's a fan of yours also.
Thank you. Thank you.
Nice.
And then next question, when will you announce dividend? Oh, we went over this already. So June 6th is the next date.
June 6th.
Yep. And then let's see. KJK Good says, so it could be sustainable until it becomes boring low implied volatility.
Yeah. So let me comment on that one. So we filed for Berkshire Hathaway, right? We thought this would be a great idea because Berk has no dividend, right? As Warren said, I'd rather invest in my companies than pay out a dividend. And so we looked, and so like it was like their IV is lower than the S&P, and the yield would be like 4 or 5% based on implied volatility in the options. And so we've held off on putting money towards that one. It doesn't mean we won't. It's just not nearly as interesting as what we're doing with NVIDIA and soon to be Amazon, right? So yeah, we did. Berk we thought was a real interesting story. I don't know if you know this. TD Ameritrade is also headquartered in Omaha, like Berkshire, and that annual meeting that he has every year, right? Everybody at TD Ameritrade would always go to that. A lot of people that work at TD live in Omaha and own some shares, and that they go. We were thinking of kind of doing like, attacking the Berkshire Hathaway shareholders with like banners and sandwich signs.
That's like the Super Bowl of the investing world.
Yeah, so I think it's great. It's if you ever get a chance to go to that, it really is a big event, and it really does take over the whole city of Omaha. About 500,000 people there. It's a great town if you live in the Midwest.
I actually have the book where they have the meeting minutes of that event for the last like 40 years.
Wow.
Yeah.
Wow.
Yeah, that was really an interesting read.
Yeah, I bet it's interesting looking back what they said 10, 15, 20 years ago, right? Mm-hmm. Like how good were they? And they're usually pretty darn good, right? Yep. Maybe early or late, but they're good in the long run.
Mm-hmm. it's going to be interesting one day because he's what, 93 or so. He's going to have to hand it off to a successor at some point.
Warren's under 90. I think Charlie just turned 90.
Oh, okay.
Wow, they're still killing it.
Yeah,
yeah.
The legends. All right. Do they? I think someone asked this already, but do they drip at net asset value? He didn't understand your response earlier.
Oh, okay. So drip is done at the broker level, right? So if you want to reinvest the dividends, so essentially you get paid more shares, your broker, you have to set that up with your broker. That's not something we do at the fund level. It has to do with the account where you're holding the ETF. And so you should be able to like check off that you want to participate in drip somewhere, whatever your brokerage, the brokerage that you're using. There's probably a checkbox somewhere that you can do, or call them and ask how you could drip. And then they'll automatically do that for you. Otherwise, on the pay date, you'll just have to go in and buy more shares. The beauty these days is it costs nothing to buy an ETF in the market for most brokers. So it's fairly costless, just a little inconvenience that you have to do it. So you could either do it yourself or have your broker do it for you.
Mm-hmm. And then KJK really recommends your book. Very informative. Have to check it out.
Thank you.
Yep. Okay, so we're starting to catch up here a bit. I think this came up to how do we treat this for taxes? He's in Canada, so it might be a little bit different.
It is certainly, but treat it as generally they're going to be short-term capital gains, non-qualified. Mm-hmm. So you'll have your withholding in Canada right away, or do it in an IRA. Use them in an IRA.
No income tax. Yeah, Roth IRA. They have a different equivalent to that. Oh, we had some more people show up here. Yeah, he's Canadian, so they have I forget what it's called, but I think they get to that down here. The option chain shows all offers, but not an aggregate. Just catching up here.
Yeah, that's okay. That's probably an implied volatility question.
Yeah. Option income is taxable in most accounts. Glenn first says, huge fan of the YieldMax ETFs, but I struggle determining what ratio of my non-core portfolio should be in YieldMax funds.
Yeah, Glenn, I again treat it like an aggressive allocation, right? That's the way I would treat something like TSLY or NVDA and ARC. Those are just more volatile underlying holdings. So just take it from the risk lens first. Generally speaking, for clients that I have, if they're, aggressive or moderately aggressive, we're doing a 20% kind of an allocation, nothing more than that. Only because, the underlying can get cut in half any one of these days, right? So you got to be careful of that.
Yeah, the audience is kind of answering each other here about the.
Right.
Yeah. Oh, he says you should have an audio version of your book. Do they have it on Amazon?
I don't know. It's on Amazon. I don't know if there's an audio version. I don't think so.
And he says, Glenn and I have to have a discussion here. He has a financial advisor. We have different opinions on that. But he says, can you please share your top 2 considerations so I can discuss them with my advisor?
Oh, yeah. 2 considerations for YieldMax. First is the volatility, the risk, right? Always start with that. So consider that. The second is, what part of your portfolio does it fit in? Your advisor is probably using some ETFs. Where does it work into that build? And then just use it as a way to kind of lift the overall yield of that ETF build, right? And so make sure you're reinvesting, talk about that, and then, see if it makes sense to fit it into, an existing ETF build that you may have.
Mm-hmm. He told him 5%. If you consider high risk. TFSA is the Roth equivalent in Canada. Oh, this is for Andre because we talk about gap a lot. So he wants to know gap means what.
So if there's like a big break in the market, usually I would say it's kind of like when they separate, but usually the gap usually fills. And
like intraday, right?
I mean, there's gaps across all time frames.
Mm-hmm.
Yeah, I think the most popular gaps, right, is where you have the market closes and then there's a big movement and then it reopens. And on a candlestick chart, there's a big gap on what the candles look like. Yeah,
that's what I see. Like when the market closes and then if it opens way higher, there's this huge gap. Yeah.
Yep.
I love gaps.
Yeah.
You like to trade gaps. It's great.
Yes.
Okay. All right. Oh, someone new on here. Will all YieldMax funds eventually pay a dividend? And if so, will they all be similar to the yields of TSLY and OARK? Probably a loaded question.
That's okay. They're YieldMax. So yes, the idea is that we do pay a dividend. on all of them. Again, the rate will be dependent on its implied volatility. We've talked a lot about that. So, with the higher the IV of the options, the higher the yield, because that's how we determine our yield from the calls that we sell and the gains that we have from selling the calls. So you look at an Apple, for example, that has like a 20-25 implied volatility, that will have to be lower than, say, NVIDIA or TSLY that are in the 50-60 range. It's all based on that.
And what I've noticed, it seems like the first dividend tends to be the highest on a lot of the funds.
Yes, right. So the first two went live while volatility was higher. Plus, there was like a month plus, right? So I think we had, so when we went, the first dividend in January for OARC and TSLY had all of December in it and also like a week of November in it. So you had 5 weeks in there. So naturally, it was just more time decay, more premium that we sold. And then volatility dropped. So you're not wrong in your observation, but I think the observation might get revised after we announce.
It's
on
just
the 6th.
Coincidence, more or less.
Yeah, because volatility is on the way back up. So look, I think it's a fair observation. You're not the only one to make it. I can only take what the market gives me when it comes to selling calls.
Right.
Yeah.
Yep. Okay, William says, will you have a Microsoft ticker? Will all the other funds on the website come out by the end of the year? Also, which ticker out of all the funds do you think will have the highest yield?
Okay. Yeah. Again, it's whatever will have the highest volatility. You know what? You want to kind of do a little news break here with Microsoft?
Let's do it.
So we filed today for 10 more tickers. So we filed first.
I think you told me over email.
Yeah. So there are 10 more tickers that we filed for, and because it's now public information, I could tell you. So I'll go in alphabetical order.
Great.
But we did Airbnb, AMD, Alibaba, Disney, JP Morgan, Moderna, Microsoft, MicroStrategies, PayPal, and Exxon. So those were just filed with the SEC. So we had originally 15, just did 10 more. So Microsoft is in that list of tickers. And I would say of that group, we have to wait for SEC approval. That's a 75-day process. Microsoft would be probably one of the first to go live there. Obviously, a lot of interest in Microsoft these days. MicroStrategies is also really interesting because it's kind of a crypto play, right? So we filed for Coin. Coin gave us a little concern when they got the Wells notice. If you don't know what a Wells notice is, it's like the worst thing the SEC could give you as a company, right? Basically, it's like you've done something wrong. We need to investigate. It's like getting a visit from the FBI. So that's not a bearish play on Coin. Don't get me wrong. It just gave us pause on launching YieldMax on Coin. But I think with MicroStrategies, that's going to be one that's going to be interesting. MSTR, I think that's the underlying ticker for that one. Let me make sure I get that right.
Took a guess. MSFY.
Yeah, MSTR. Yeah, MicroStrategy is MSTR, and our ticker on that one will be
here's a good question. Will you have like a basket of all of these funds?
Yeah, so we've definitely talked about that, and then we could handle the reinvestment, right? So we would handle the individual pieces. So yeah, I think we reserve the ticker YieldMax just for that exact reason.
Nice.
Oh wow.
Yeah. Awesome. Okay, which fund would you expect? I think we're getting this question a lot. It's whichever has the highest implied volatility, like you said.
That's right. Yeah. I mean, right now it's tracking Tesla, right? But NVIDIA's had a nice little pop, and we'll see what happens. I wouldn't expect like Amazon to be all that high, right? Because its implied volatility isn't that high. But obviously a great stable company, so we like to do that.
Yeah. All right. Rob Smith says, as an early investor in Tesla, I mentioned YieldMax TSLY in my Tesla investing group. I was amazed nobody knew about TSLY. I explained it to them, and many started buying TSLY. Great brother for TSLA.
Thank you.
Yeah.
It's an awareness thing at this point, right? So we agree that we just want to get the news out about it, that it exists, and to use it the right way, right? Treat it as an asset that can do a lot of great things.
You know what's funny? Funny story. So 3 months ago, I don't even think I knew about YieldMax at all. And now I've basically become a YieldMax channel because I just go where the audience directs me to. So I started covering dividends, which got to be really popular. And then all of a sudden I started hearing, I learned about TSLY through the audience. Now all of a sudden the channel's starting to blow up a bit. So.
Well, that's great. Well, listen, I'm glad I got to break the news to you about the new tickers.
That's
you
awesome.
It.
Happened right here. Yeah. So, all right. Thanks, Jay. The info you provided is the sanity check I was looking for. All right.
You got it, Glenn.
Yep. Okay. Well, I think the questions slowed down. So we've been going for about an hour. Anything else, Andre, that you want to discuss? Or
well, when it comes to options, I mean, I'm not the biggest guy into that, but with all this leverage being put out there, we have like massive amount of leverage out there when it comes to options. How do you see the economy handling this kind of type of leverage?
Yeah, so like leverage is always, you got to be careful with it, right? Leverage can always be the root of all evil when it comes to investing. When you think about every major market crash, it all had to do with leverage, right? And so I think it's one of those things that you got to understand if you're taking leverage and manage through that. I don't think it's a market factor, and it can bleed into the economy a little bit. Take the Great Recession, right? 07, 08. That was all leverage, right? In the the real estate market, because somebody had an equation that thought, real estate only goes up, right? So like they leveraged the heck out of that. Same thing. I mean, geez, I'll go back to the Great Depression, right? That sell-off was all leverage. You used to be able to buy stocks, $10 for every dollar, right? So it was a 10 for 1 on margin. And when things went sideways, people didn't have the money, right? So options have this like implied leverage in them because for such a small amount of money, you could control 100 shares of the underlying. So you just always have to be cognizant of the kind of leverage you're taking. Now, the YieldMax funds don't take any leverage. We're a strictly 1.0 target fund, right? It's all about the yield and selling the calls. So we don't have any leverage exposure. But, the advent of the single stocks, there's a Tesla 1.5 fund, right? A PayPal 1.5. Like those become interesting. Those don't use options, they use swaps, but you could definitely recreate those. It's just one of those things you want to be careful. I think with this mini banking crisis, I don't know, what are we going through right now? It's not even a crisis, right? But can you impact, what's happening with the amount of leverage that banks, took based on their portfolios, and yields went to 5%. They weren't expecting it. And now somehow treasuries caused them to be insolvent. It's kind of a wacky world right now that we're living in. So it can bleed there, Andre, but generally speaking, I don't think leverage is a thing that, is a major, economic problem. It's a market risk, of course. And like I said, every major market sell-off, you name it, it had to do with leverage. So it's one of those things you want to measure.
I feel like they've gotten a lot better at mitigating factors and stuff like this whole banking thing. If this had happened in 08, it would have been a disaster, but they've gotten better at.
I don't know. There's some pretty big boys that went under in 08.
Yeah. Right.
I mean, think about it. Like every major bank was forced to do something, right?
Yeah.
You almost had Merrill Lynch go out of business, right? Bank of America had to pick them up. If you remember what Wachovia Bank merged with Wells Fargo, huge banks went under. It was much worse than this thing that we have going on right now.
Yeah.
That was wild.
Interesting.
All right. Well, good discussion. Thanks for coming on.
Yeah. Thanks for having me. Thanks for the platform. Appreciate everybody that helped make this happen. KJ, of course, for you. Thanks awesome. You for that.
And I think I'll be buying in a lot more. Definitely APLY, NVDA are on the list for sure.
Yeah, maybe we come back. I'll come back on after the announcement.
The next dividend. Yeah, that would be great.
Nice.
Yeah. Awesome. Well, thanks.
I won't babble for a whole hour, but thank you for the platform. Appreciate it.
Definitely. Yeah. Really good session. All right.
All right, guys. Thanks so much. I'll drop off.
Take care. Thank you. Yep.
Thanks, man.
All right. Bye.
That was awesome.
Yeah. Really good. Oh, he's buying all of them. Yeah, I thought he was only going to go 30 minutes, but he said he could go a whole hour. She showed up late. He just left. I guess she was watching the whole time. All right. Are we good? Anything else?
Yeah, I mean, that was a really good call. I mean, I'm happy they don't do the technical analysis on their fund, because there's a lot of questions I would have to ask. But since they don't do it, that's really good.
No one asked any really dumb questions, but I did have the space helmet ready. This was a joke. This was a joke yesterday. The Space Cadet helmet. I had it ready.
What would be a good space question?
Just like a really dumb question, like what's an ETF?
Oh,
what did he say? I own TSYL, but I do want to buy APLY. Yeah.
I want to check out his book to see what his perspective is.
Yeah, I want to read that too because I feel like that's ahead of its time. Because back in 2010, I didn't hear a word about options in 2010.
No. Yeah, same.
Mm-hmm.
Like the most like leveraged funds that I heard of was like those mortgage-backed securities. It's like the only thing that I really got into. But for him to talk about
that's what crashed the market in 2008, wasn't it?
Yeah. Well, I wanted to get into more economic stuff, especially with the leverage portion, because leverage and options, I wanted to see how much leverage can they manage with volatility? Because once volatility,
options are derivatives basically, though.
Yeah, they are derivatives, but because it requires some type of exiting volume. If the market just say hypothetically just goes straight down, how no one can exit them if they're all leveraged up, unless
I got to answer this question. Leave work early. I didn't go into the office today. Work is right here with me. I logged in. Don't tell anybody this. I logged in on my other computer. So, yeah. Did anyone hear Jay say to buy more every month? He can't give recommendations. He's a fund manager.
Yeah.
But one of you said you have a financial advisor, so we're going to need to have a talk about that because financial advisors don't really add any value.
What? Who is a financial advisor?
No, this guy, Glenn Furs. I think he said he has a financial advisor, so we got to have a talk.
Mr. Glenn.
I used to work for financial advisors. I feel like they don't add any value.
Why do you have
if you're investing in your own stuff, you really don't need one.
Actually, a good question is like for your financial advisor, what do you have them managing?
Yeah, and how well are they outpacing what you could do yourself?
And how expensive are they?
Right. Yeah. Oh, he wanted to know what was I'm not letting you off the hook, but the peak audience was like 42, I think.
We got some people on Rumble, and I got 3 people from my group who are on the call right now.
Cool. I knew it would be a record.
Nice.
Yeah. Let's see what he said. He said to drip every month.
Actually,
I worded it that way so I get an answer from Jay technically. Oh, see, I forgot. I'm the advisor. I'm the coach.
I do got a question about for the audience. Because when it comes to the drip program, I don't do that like automatically. I actually manually like set my stuff. So if I get paid I get paid the dividend on the 5th of whatever, I would do like a buy limit to re-enter at a cheaper price. Do you guys do that, or do you guys prefer it done automatically?
What was the question?
When it comes to reinvestments of the dividend, do you guys prefer it done automatically or done manually? Because I prefer mine manually.
I actually, we had this discussion yesterday on here. I used to reinvest with the drip, but what happened, a lot of the stocks were getting to like 52-week highs.
Yeah.
So I quit because I was buying in at 52-week highs. So I just started taking the cash and then investing it myself. And I even did a partial portfolio reveal. I showed like the dividends I'm getting and stuff. But I just take those in cash and then buy other stuff.
That makes sense because the drip can put you in like very odd positions. So for me, like even if I have to reinvest it, I'll do like a couple staggered buy limits at those lows with that dividend amount.
Big Lance said I was on bear behavior, but he meant best behavior.
No.
So was I. I didn't break out the space helmet, Lance. That was an inside joke yesterday.
It'd be interesting to see because, man, if you look at the amount of leverage that's out there, especially just in options, I mean, the amount in derivatives, it is insane amount. So if we have a very volatile amount, let's say at 10% in the S&P or 10% in the NASDAQ, let's say down or 20% down, like back in COVID times, how many people go insolvent?
True.
And if it gets worse, like a Black Friday, like 30%, I guarantee you, I almost guarantee that the Fed will step in.
Yeah, we were debating that yesterday. Most of the audience thought that it's going to be basically like quarter 4. they'll be cutting rates by quarter
Oh,
four.
I'm happy you brought that up because I talked about this on a live stream. This is my perspective, guys. I believe that we're going to go down a little bit, but at the end of quarter three, and this is my perspective, end of quarter three and the beginning of quarter four, we're going to see a massive growth in cryptocurrency and in stocks. And this is going to lead into the next play for the election. They're going to boost the markets prior to the election.
They'll have everything looking good by 2024.
Yep, and interest rates will probably drop dramatically. I don't think like 25 basis points. I think much more.
That will be good for Rob Smith, for his guy Newsom. He'll get when he gets in.
Yeah, I mean.
So what did he say? Yes, I manually too. I actually put like 20% back in to every fund I own. Use the rest to live on. Ameritrade just allows you to do 100%. I know they need to change.
Yeah,
that's a job I would love to have. I would love to code one of these brokerage platforms. Actually be a developer on one of them, because there's so many things I see that I know as an investor that I could make better, because it doesn't make sense. Why can't you do a partial drip, like you're saying?
Yeah, partial drip, yeah, because why it's like if you have like a very what's it going like a Pepsi, if you have that dividend you're paying out for many years, why would you enter right now? How volatile they are.
This guy's comments are one of my favorite. It was like a pay-per-view, but no super chats yet. It could be with some super chats. By the way, that's how. So since I'm what's his name, Glenn First. Since I'm his advisor, that's how he pays me in super chats. $10 super chat. My fee is cheap, really. If you think about it, that's the cheapest coaching you're gonna get.
And also, I wish I can maybe with the next talk, I want to see how big of their portfolio is just in options. Is it 100%? Like, how do they break out part of their?
Go on the site. Go on the site and look.
Not the fund. I mean, his personal. How does he? What does he do personally? Like outside of his fund?
Yeah, I don't know.
What does he do?
Yeah.
How does he allocate it? That'd be interesting to talk about.
Mm-hmm. What is this? Under what situation would YieldMax underperform and Leroy your investment significant? What does that mean? Leroy your investment?
Oh, you mean like Leroy Jenkins?
People have fat fingers on here. Leroy lose money. Okay. What is the price usually lowest after paying? When is the price usually lowest? Oh, something interesting. Rob Smith has a really genius strategy. So what he does, he sells before the ex-dividend date, before the stock drops. Mm-hmm. And then he buys in, like he gets if you think about it, you get the dividend as long as you're in by the ex-dividend date, you get the dividend paid, but you can sell out of the stock before it drops. So that's what he does. Then he buys something else right after the ex-dividend. I think it's a genius strategy, actually.
Mm. Because the ex-dividend date, that's usually like after it drops. That's why I like to put in my my buy limits just to get that little bounce.
Mm-hmm. All right. Did I miss any other comments here? We'll go for a few minutes longer. Let's see.
Actually, I'm gonna put this on my to-do list. I'm gonna order his book, and when we get on maybe on another live call, we can go through the book.
I canceled Prime because I'm not getting the student discount anymore.
How much? It
was like half the price. Now it's like $150. So I'm losing stuff to watch because. So Prime Video is gone. Now my Netflix, I was sharing an account. Now I can't do that. So I'm losing stuff. It's okay. I don't need to watch TV anyway. I say I'm a content creator, not a content consumer now. Right? Yeah. Well, we both are. Yeah.
I would say some things on Netflix like Ozarks. Good way to learn about money.
Oh, that's a good show. I've had people compare me to him.
Oh, yeah, he's a man. That's like one of the
I've had people ask me, "Is that what you do?" I said, "Oh yeah, that's definitely what I do."
I got millions of dollars on my walls.
Yeah. Some fake money. But anyway, someone wants to see Yahoo Finance.
Show us finance volatility.
Yahoo volatility for what? For one fund?
You mean like a VIX? It's actually interesting. Like I traded on the VIX a couple times. And some of these overseas leverage trading on the VIX. They're getting they're doing like 1 to 1,000 for the leverage. That's why I stay away from them because the volatility is unmanageable.
Oh yeah.
Yeah, it just spikes everywhere.
Mm-hmm.
That's another thing. I would like to see what his perspective is on like crypto and other markets.
We'll save all that for next time. He'll be back on after June 6th.
Nice.
So, all right. Anything else, people? What is Jay's last name?
I couldn't even say it.
It's in the title. It's in the title, dude. Despite CW, after listening to Jay, OARK is back on the table for me. Actually, after talking to Jay, I feel really reassured. I think this is a good strategy.
How much can his? I mean, his fund is not leveraged because they're making income off the fees mainly, right?
Mm-hmm. I think it's a 0.99 expense ratio.
Okay.
Anything 20% yield and above is amazing if the price doesn't erode over time. But I feel like, I don't know. I think we're in good hands. Like, he knows what he's doing. I feel reassured after talking to him.
I would have to ask if our next one, what is the perfect scenario that can hurt his, just say, the overall payouts?
Remember, write these questions down for next time.
Yeah. Because if this, say hypothetically, because basically I know they're looking at the prices to see how they can basically manage it. What would happen if that perfect, black swan event happened? How would they manage that?
They're just BSing you, Ameritrade. They don't want to fix it. If they hired the right developers, they could do it. I bet I could figure it out. I could be a business analyst and I could direct the programmers to fix it because I know the investing side. I should work there.
Hey, it's like a good, 6-figure income immediately.
That would be honestly my first job. I thought that's what I was going to be doing, but I was just working on like mainframe systems and stuff, that basically treasury payments and stuff. But that would be like a dream job, like programming a brokerage system.
Yeah, I mean, there's a couple things I would like to add. I have all the brokers that I'm with.
Yeah.
Just simple things like staggered orders.
Mm-hmm. Yeah, partial drip would be great for sure.
Yeah.
So, all right. Well, good session, everyone. So we'll have him on again for sure.
It'd be awesome, man.
Yeah.
I think I'm going to ask my group what they thought. See if they get their book.
Spend more time with us. I do. You all must not like work or anything, because in the middle of the day, I do a live stream in the middle of the day and I get a record audience. This group cracks me up.
Oh, you're working right now?
Before I flew out to Vegas, I had the day off and I did a live stream at like 3 p.m. and I had like record participation.
Wow.
I was like, wow, everybody's just hanging out at home, ready to join.
Yeah, because right now it's this ending of the markets. I mean, I'm doing my winding down. Actually, there's one thing I'd like to cover if you don't before we depart.
Yeah, go ahead.
For NVIDIA, because this is something that's interesting. I'm exited out of like every position, like gap. Because I wonder, the audience, who thinks the gap's going to fill on NVIDIA?
Doesn't it always?
It almost always does, but the timing, I think it's going to be very, very soon.
Yeah.
Very, very soon. Maybe. Unless it's like.
Oh, that's okay. I'm just giving you a hard time, Denny Keaton. I know. It's in the title. That's all right. Good learning session. Don't work. Retired. Yeah, lucky for you, and you're loaded too. Wish we were all there. Thanks for setting this up, Coach. Yeah, you're welcome. TSLY declines. Volatility declines. TSLY declines. Divs decline. Yeah, maybe. Tesla.
Let me see Tesla.
Oh.
Tesla, I have 4 live positions in it now.
I think the market was down today, wasn't it?
If you look at the amount of momentum it happened in the last 15 minutes. If you check the last 15 minutes on TSLA, explosive movement. I think on Monday, the next day open, it's going to gap up.
I'm watching Meta every day. I'm about to sell it because I told you I'm sitting on like my biggest call option at this point. Let's see. Oh, Bill Ackman wants Jamie Dimon to run for president.
I wish it'd be nice if Elon Musk ran for president.
Yeah, but he can't because he's not a citizen. It didn't stop Obama though.
The conspiracy talk gets it.
I always say that with a straight face.
Yeah, he's oh man, I don't. Yeah, but If it gaps tomorrow, it should be an interesting gap.
Mm-hmm. Oh,
Maybe
Meta went up today.
Microsoft, Apple.
Let's see, NVDA.
$2 down. Gap. Interesting. My fees are expensive when it comes to. Oh my gosh. Have you seen some of these fees? Like I'm paying $154. I'm paying $154 a day for my positions in NVIDIA. $154 per position. So it comes out to almost $600 a day.
Like in an option?
Yeah, this is a part of an option trade. My option cost is about $154 a day for my lots, for my order size. Like on my trading account,
how many contracts do you have?
4 contracts that controls over. It's actually at like 2014.
You're gonna have to manage that. Yeah, you're gonna have to manage yourself out of that because the theta will eat it up.
Oh no. For me, I don't do anything. My computer automates everything.
Oh, what's the expiration on it?
My expiration is as long as I need it to open. I can close it anytime I want to.
Yeah.
Let me see.
All right, go ahead.
That's screen. Oh, on my screen?
Yeah, go.
Here. If you guys do not see what this means or understand it, just let me know. I will explain it. But give me 1 second. How do I share my? I got my lamp right in front of the share button.
Oh.
Give me 1 second. Here we go. Yep, that's fine. I'll try to explain as much as I can. If you guys have any questions, let me know. So here's my NVIDIA positions right here. Where's NVIDIA? So I'm right here still. Like each position's at almost $8,000, and we're almost charged $150 a day for it. What's NVIDIA? I can't exit now at all. NVIDIA, what's my specialization rates? So if you guys look at the screen, like my margin percentage is 20% on these hedges 50. Oh my God. Do you guys follow this type of stuff? Because my contract size is basically like 100 to 1. It's very similar to your guys' option size.
Wow.
Yeah, that's why we'll be exiting very soon off all these trades. Interesting. I hope do you see it filling too? Because my computer says it's going to be filling soon. Damn, that's going to be a big gap. So I hope this helped. Yes, set a large gain in a short time. Where's that? Man, remember that talk we were talking about last week?
Mm-hmm.
Remember I was saying he's going to jump right here? I had all those orders. Those orders engaged, and that's why they're up 7,500, 7,800, 7,008.
Nice, yeah, because it kept jumping.
Yep, just because of that gap. And in this gap right here, my computer didn't even enter. Like it just said enter here, and exit all the way down.
Is that the next day, the gap?
Yeah.
Okay.
This gap's possibly going to fill, and I'm going to exit around here, and we'll see how it does. But most likely it's going to because gaps on stocks. I mean, it is near 100%. Near. I can't say it does 100%, but all my calculations will say the same thing. If you entered at the gap, you should be filling up soon, especially with the gap of this magnitude.
Yeah.
For us, it's like 600 plus pips. But you guys would call it dang, like $70 almost, $74.
Yeah.
Well, we'll see. Tesla. That's what I'm saying. Like you see Tesla. Look at the last look how many times I've entered just in the last 5 minutes.
Tesla. Is this bot trading?
Yeah, this is my robot trading it. Here's the last.
Cool.
Here's the close. I entered 1, 2, 3, 4. I entered 4 times prior to it closing. we'll definitely see how bad that is or good. And Microsoft, I got trapped. This right here. We'll see how Microsoft does, but I think Microsoft might be heading out a little bit lower.
Yeah.
Maybe down $20. $8 down to $14 down. We'll see. Hopefully we'll go up, but actually we have to do our competition still.
Oh, that's right.
Let's see who can win. I don't think it's fair though.
What?
Because I don't actively look at these. I just let the bosses trade it.
You know, I've been dropping the ball on following the market myself. I feel stupid for getting out of that NVIDIA one because I literally, if you follow that, I recorded that class presentation that I did like a year ago. And I literally said that it was going to go up within the next year, but I talked myself out of it.
Yeah.
You know?
I know the exact feeling. I used to, when that happened to me, I used to be like, a good example would be like Amazon. I sold Amazon at $128. And I closed all my positions at 128 before it ran up to the 500s and thousands.
Oh, shit. You know, one of my favorite back tests on the Thinkorswim, there was like a $500,000 potential profit if you bought Amazon call options like in March of 2020 and sold them by September. Which is funny because, like Jay was saying, it was such a surreal market. Like he said, people were dying supposedly of the pandemic, and the market going up.
Investing during the pandemic, I'll put it like that. I was a lot more cautious. I have like a leverage button. That's why I can ask him, how much leverage can you guys control? For me, I have a meter and how much I can control.
You know, I remember January 6th, the market was up. The market was up, and it was so surreal because I'm like, after today, like the market went way up.
Yeah. Here's he said TSLY. I can't trade that.
Yeah. Oh, that's right. Yeah, because your broker's not.
If I can trade TSLY, I want to see if I can outperform him.
Oh, okay. Outperform Jay?
Well, I mean, my robot is already up 7 times 4, so 5, almost all together. So it's up almost 28.
Wow.
Yeah, that's this max leverage, but this isn't. Apple didn't take anything. But Apple, I don't like it so far.
You don't like Apple?
No, because Apple right here, it didn't enter any orders, so I have to wait.
Okay.
What are these numbers asking me? Okay, 69 open orders. Okay. We'll see.
Yeah.
I'll see how my rollers are doing, but if anyone has any questions about that, just let me know.
All right. Anything else for today? Probably gonna.
No, I'm good, man.
All right. Well, great session. Thanks everybody for tuning in. All right. Take care.
Oh wow. Yeah.
What?
I got comments on Rumble.
Oh yeah. This was a record for concurrent audience. I knew it would be, but yeah. All right. I'm gonna end the broadcast. All right. Take care, everyone. Thanks for tuning in.
Yep.